Some of this gold was leased gold, which ordinarily would remain vaulted in the Bank of England and merely be a book entry transfer. Because that has come out, it has alerted every central bank with balances in both New York and also London, and I suppose also Switzerland, to the risk from leasing. And I think it means that leasing game is now stopping. I don't think any central bank will lease gold from this moment. We have, I think, the potential for a systemic problem arising from the lack of supply in a market where the future value of paper currencies is diminishing.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for April 8th through April 15th, 2025, while supplies last. First this week, we feature 2025 1-ounce silver Canadian maples at just $3.49 over spot per ounce. Constitutional or junk silver is just $1.99 over spot per ounce. 1 10th-ounce Platinum Britannia are just $29 over melt, and 1 10th-ounce Gold Britannia are only $27 over melt. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Welcome back to Liberty and Finance. We are always privileged to have this distinguished returning guest, Alasdair Macleod, a former bank director and former head of research at goldmoney.com, now the founder of his own Substack, joins us this Monday, April 7th, 2024. Alasdair, thank you for coming back on Liberty and Finance.
Thank you for having me on.
We've got several things we have to talk with you about today, not the least of which in the front of many people's minds here in the U.S. is our tumbling stock markets. There have been extremely high volatility, not only over the past quarter or so, but exceptionally leading into the last few trading days. We want to pick your brain about what you think is behind that, and if that gives us a clue of what's to come. We'd also like to follow up with you about the impact of Trump's announced trade tariffs on all kinds of countries all around the world, ostensibly with the goal of leveling the playing field. But I think you've got a take on that talks about accelerating the separation of global economic trade into camps that may be diverging in a very significant way. And then we're going to follow up with talking about physical metal and where it's moving to and from and why. So if we could first start with the roiling stock markets that are plunging and showing a lot of volatility globally as well as in the U.S., and see what your thoughts are as you look at that situation, because many people are concerned about the impacts on their near-term and longer-term financial well-being.
Yes, indeed. This is a drum I've been beating for a little while. We're top of the credit bubble, and it's the biggest credit bubble in history. And if you don't understand the credit bubble, just think about the debt bubble. You will, I'm sure, confirm that we've never seen so much debt in the world. Credit is the other side of debt. This is the biggest credit bubble in history. And credit bubbles are reflected in stock prices. And when they go pop, they go down. And I think that's what we're seeing. The situation is made worse by Trump's tariffs because of timing. At any other time, if we weren't in such a bubble, these tariffs, I don't think would have such a great impact. But the combination really of a debt bubble bursting and tariffs is exactly what we saw in 1929 to 32. This time it's even worse because the debt bubble is even bigger. And also the tariffs have a greater effect because back in 1929, basically America was more or less self-sufficient in terms of imports and exports and so on. Nevertheless, the impact of Smoot-Hawley was really pretty bad. Today, of course, everything works on supply chains. You get people like Apple and all the rest of it. They've got manufacturing facilities in Eastern Asia, and all the design is done in California. If you read the blurb on your
If you can even read that fine gray print, yes, that's exactly what it says.
Exactly, yes, exactly. I think it's designed for younger people than us. But as a serious point, though, the combination of the two things, I think, is likely to be worse this time, potentially worse. And it's difficult to see what the Fed or the US Treasury can do about it. Undoubtedly they'll go into the markets and try and steady them. We might have seen a bit of that this morning, though. I think there's probably more to do with a bit of bear closing. This is Monday, incidentally. The fourth day of trading after Trump's announcement on tariffs. But I think there's a long way further down to go. I mean, I don't make the comparison with 1929 to 32 lightly. It is exactly that. So I think we're going to see a very significant fall in stock prices. And also, of course, the other thing is that brings into question the survivability of many companies and also the banks. The banks will take bad debts on the nose. That is the way in which credit will be eliminated. The value of the credit is the other way in which credit is eliminated in effect, not numerically, but in terms of total value. And it's a process, as I say, which I just can't see how the Fed can stop it. They can't manage their way out of this problem. Furthermore, bear in mind that foreign investors have something like $14 trillion tied up in US stocks. Are they going to really just sit there and watch these values go down? No, they're going to get out. I wouldn't say they get out of $14 trillion worth. I mean, apart from anything else, it'd be worth a lot less by the time they start really getting out. But you can see that there is massive selling pressure going to occur from that quarter, particularly because of two things. The first is that if you like, the deep recession, and it's going to be a deep recession, which is implied by collapsing stock prices, plus these trade tariffs, plus the loss of value in credit, which is the way in which the credit bubble will deploy itself. That's going to lead to heightened risk, if you like, of owning foreign currencies. And consequently, the only way in which the dollar will be supported or could be supported is for the Fed to raise interest rates. And if the Fed doesn't raise interest rates, then foreigners are just not going to go and buy the US Treasury debt. And they won't stop selling the dollar. So this is actually, I think, a very, very important moment in the history of fiat currencies. And I think it is actually the beginning of the end of this fiat currency period.
We've talked with you several times in the past about how the Fed is really the banker's bank, and when push comes to shove, they will sacrifice the currency to save the banking system. We saw huge drops on Thursday and again on Friday in, for example, Bank of America, which has kind of been the poster child identified by many market watchers as perhaps one of the more vulnerable banks in the U.S. banking sector, among others. Can you give us your view? Ironically, today, at the moment, Bank of America is one of the few green things on the entire list of stocks. But can you give us your view of the current state of risk of the American banking system and perhaps the global banking system, which you've spoken to us several times about in the past, but at the current market volatility and potential impact on bond portfolios of the banks, et cetera, or if also on the health of companies that are struggling right now, and you've talked about the commercial debt portfolio being toxic on banks as well.
Yes, I think it's a fair point, and you showing the Bank of America share price is actually to the point, and the reason it's green today, I guess, is because people have been shorting it, fully aware of the problems that banks are likely to have, and today, a little bit of a bear squeeze, they've been closing the position. There may be a little bit of price management in there. I mean, who's to know, who's to say? But the entire banking system. I mean, if you look at the wider banking, financial ETFs and so on, they have been extremely weak. And this does, I think, indicate heightened fears, if you like, of systemic risk. I mean, the American banking system is highly leveraged compared with the past. I guess that you're looking at around about 15 times asset to equity. So bad debts doesn't take a lot in the way of bad debts to wipe out the equity and give you negative equity, if you like. Worse than that, of course, we've also got the Fed is already deeply into negative equity. So, how does the Fed actually rescue a commercial banking system or backstop a commercial banking system when it itself is deeply in negative equity? Well, I mean, the answer to that one is that either it prints the money, which of course is if you like, credit replacement, and in a sense would just devalue the dollar even faster. Or alternatively, it turns around to its government or its shareholders, and in this case, I think we assume it's the government, though we hear all sorts of things about how it's privately owned, and so. But it would turn around to the government and say, "Look, we've got to recapitalize," and so you've got the prospect of a government in a debt trap recapitalizing its central bank. Is this going to sort of spread enormous confidence around the world about the outlook for the dollar? Well, questionable, I would say. Moving on to other areas where there is very high backed leverage, higher than the United States in particular. You've got Japan, obviously, and you've got also the Eurozone. I mean, Eurozone banks and Japanese banks typically have asset to equity ratios in excess of 20 times. And that is something that's really come about by banks expanding their credit in order to be profitable in times of negative interest rates. So the damage of negative interest rates, if you like, is still very, very much with us. As to where the risks actually lie, I think we've already seen American banks try to move out of risk lending, away from lending to corporates in particular, into lending to the government. And the lending to the government is very, very much short-term lending, like T-bills and so on and so forth. So I think in a sense, the financial sector or the banks have de-risked themselves. Now, obviously, we're talking about the top level banks here. What goes on underneath that? I think there are a lot of banks still trapped with bad commercial real estate loans. I note that according to FINRA, there is something around about 900 billion, in other words, close to $1 trillion of margin debt in the equity market. That is going to be, I think, a problem for some. And on top of that, if I'm right about the combined effects of a deflating credit bubble and tariffs, then a lot of the collateral that backs loans for banks is going to be underwater. So, we do have the potential for, if you like, a crisis which makes the great financial crisis look really like a tea party. I'm afraid. So that I think in a nutshell, those are the problems. We've got a commercial banking system which is going to have to take on or weather a lot of bad debt, which is undoubtedly going to put some banks into negative equity. They will have to be rescued or something happen to them. And at the same time, you've got central banks themselves in negative equity trying to rescue a fiat currency system. And on top of that, as far as the Fed is concerned, they've got the problem that because the US and other economies are going into a slump, I'm calling it a slump, not just a recession, then government finances are going to go horribly wrong. And that basically can only lead to one thing, and that is higher government borrowing, which means higher borrowing rates. The risks to people holding dollars, I think, are just going to escalate. And under those circumstances, if they're going to hold their dollars, they're going to need higher interest rates. But higher interest rates makes the debt trap against the government worse. So what do we do? I mean, the Fed, I think, is in an impossible position on this.
And in the face of that, you also have what you've described as a separation of East and West, in the sense that the entire global economy and trade relationships breaking into major sectors where the U.S. has really ceded its hegemony to Asia. Would you like to dive into that a bit further, if people can understand your thinking about that?
Yes, I mean, it's quite clear that one of the consequences of these tariffs is to drive foreign nations, if you like, to cooperate more with each other, given that it becomes difficult to export to America. And we've seen this already. I mean, China has for some time been talking vaguely with South Korea and Japan about a mutual trade agreement. That has now gone to the top of the agenda. Now, I think this is very important because you're going to have three technological powerhouses coming together. And the implications, if you like, for the Industrial Revolution, for the entire Shanghai Cooperation Organization and BRICS, and any other nation which feels that it is being badly done by America. I mean, we're going to see the majority of the world, and by that I mean the world which is not beholden to financial markets in the sense that that we are. I mean, if we have falling financial markets, it's a disaster. If, let us say, an East African country has falling financial markets abroad, I mean, it shrugs its shoulders and says, well, you know, there may be some negative consequences for us, but this is not actually all that important in our scheme of things. So I think that Trump is leaving a geopolitical vacuum, which I think will be very rapidly filled by the partnership between Russia and China. And not only will they be bringing in, I mean, we know that Russia is already bringing in, admittedly jointly with China, Iran. You've also got North Korea, who are said to have been helping Russia on the Ukrainian front. And now we're going to get, I think, virtually every nation in Southeast Asia is going to swing towards this partnership, including, now this is probably a very controversial thing to say, but if I was the president or prime minister of Taiwan, I think I'd be rethinking my position in the world. I think, I mean, obviously, I would not accept being part of mainland China, but on the other hand, I think I would look very carefully about setting up, enduring trade relationships with China, and maybe talking sort of vaguely about long-term cooperation rather than nationalization and so on and so forth. I think China would actually go for that. So this is going to be, I think, very, very interesting. It does mean that the people who are left out in the cold will be America. America will go in on itself, and it will feel that it doesn't need the rest of the world. I mean, this is the message it's giving through its trade tariff thing. It wants its manufacturing to come back home. It doesn't want anything abroad. This is a very, very parochial and autarkic view, if you like, but that's what we're dealing with. Europe has a huge, great problem. It doesn't know where to turn. I mean, they're still, if you like, guided by their own propaganda. They believe their own propaganda about Russia. And that's something that will have to change. How long it'll take them, I don't know. But the longer they delay, the worse it's going to be for Europe. And when I say Europe, not just the EU, but Britain as well. Britain, I think, is trying to be a bit more realistic, and it's got more flexibility than, say, Germany or France or whatever. So But nonetheless, I mean, what we're looking at is the financial world. I mean, putting just Japan to one side for them out of this because of their intended new alliance with China and South Korea. But I mean, you've got the UK, which is the major financial center in Europe. You've got Europe itself as a major trading bloc, and you have America. That's where the disaster is in those nations. So from the point of view of China and Russia, why should they be involved with it? And I think the implications of this for the dollar are very stark. We've been talking for a long time, speculating about what currency BRICS is going to come up with. You know, they need a new trading currency. It started off with the Eurasian Economic Union, Sergei Glaziev being appointed to come up with this new currency, if you like, for the members of the Eurasian Economic Union to trade amongst themselves, and this would be the model for the wider BRICS, whatever, all this sort of stuff. The problem now is not so much that story. The problem now is that by withdrawing from the world, the dollar is going to be, if you like, it's going to go down in its importance a lot more quickly. And Asia now does need to find a replacement. Now, we don't know what form that's going to take. I know what I would do if I was involved with any policy committee, but I'm not. And it won't surprise you to learn that I think that the way forward, quite simply, is to reintroduce a system of gold standards, credible, where paper currency can be exchanged for gold at a fixed rate. That would be the way forward, and that was indeed the basis of the Industrial Revolution, first of all in Britain, and then all around Europe and also America in the 19th century and up to the First World War. That is the only way to do it. Whether China has got the gold reserves, Russia has got the gold reserves to do it. Quite a few of the other nations haven't got the gold reserves. They could probably tie in with, you know, a more stable currency or a currency which has the gold reserves. I guess that the way in which central banks have been accumulating gold to sell fiat currency means that in policy terms, they're already moving in that direction. So, but I think the key point about this is that by withdrawing from the world trade, I think that the use of the dollar globally is actually going to decline a lot faster than it would otherwise.
You mentioned here about central banks acquiring gold over the last several years. It's been quoted a number of different ways, and I don't have the figures right in front of me, but I've heard such things as in the last 4 years, central banks of the Eastern world have accumulated more physical gold than they had in the previous 60 years combined, that sort of thing. And it seems to have been accelerating. Certainly there's been a lot of physical movement of gold and difficulty delivering off of the London Exchange and off of the COMEX Exchange in New York. Any updates from you on any insights we have about this movement of physical gold, focusing on London and New York, but not limited to that?
Well, I don't think there's anything further insofar as circumstances, whatever they may have been, drove huge great premiums on COMEX, which had the effect of sucking out liquidity because of the arbitrage opportunity, physical liquidity out of other centres, particularly London, secondly Switzerland, and then some other centres as well. That, I think, obviously the premiums have diminished. I mean, there still sort of tend to be small premiums, if you like, on the futures market on COMEX in New York. But, the big rush, I think, has basically happened. My reading of it is that you've got to think in terms of the stands for delivery, which have yet to be delivered, which are still sitting in the COMEX warehouses. You can see the charts, if you like, of those totals over time, and quite clearly you've got two peaks. The first one was just after the COVID problem, when we had equally a crisis and it was a crisis which led to gold being moved from London to COMEX. You may remember that. We have a second crisis. Now, it's less obvious because we don't have a COVID, if you like, driving it. But I have no doubt at all that it's a shortage which will persist. On top of that, I mean, we don't know who's been standing for delivery, but the rate of stand for delivery has increased roughly fourfold in the first quarter of this year over last year. And this is, this, as I understand it, is much of it is yet to be delivered. I mean, we're talking about 400 tons in the first quarter. So that has to be covered, if you like, because otherwise, if you don't cover it as a bank, you're at risk. And so I think that does explain that. But there is another factor, and that is that because quite a lot of this gold was coming out of the Bank of England, and because, therefore, a lot of this gold, or some of this gold, was leased gold, which ordinarily would remain vaulted in the Bank of England and merely be a book entry transfer, because that has come out, it has alerted every central bank with balances in both New York and also London, and I suppose also Switzerland, to the risk from leasing. And I think it means that that leasing game is now stopping. I don't think any central bank will lease gold from this moment. Now, there are leases still running, and the problem with leases is that, you lose possession. It may remain vaulted, but you've lost possession. And furthermore, that gold may be rehypothecated into another lessor. So this is a situation which is actually very, very bad for any central bank wanting to protect itself against the ending, if you like, of the fiat currency system. As far as the market is concerned, the withdrawal of this leasing is going to withdraw a very important part of the supply, which is necessary for the derivative system to work. It needs the liquidity, if you like, of leasing in order to work. That is now going. So what we have, I think, is even though the premiums have basically gone after COMEX futures now, we have, I think, the potential for a systemic problem arising from the lack of supply in a market where the future value of paper currencies is diminishing. This is, it really is beginning to mount up. It's a number of things all coming together. I mean, there was a film a long time ago called The Perfect Storm, and I think it's an apt description for what is basically developing in the gold market.
Alasdair, you write about these topics on a regular basis on your Substack. For people who want to follow you more often than your approximately monthly appearances here, and thank you for coming on more often recently as things have been becoming more volatile and we need your insight more often. Where can they follow your work on a regular basis?
My Substack is alasdairmacleod.substack.com. But if you Google Macleod Finance, you should come across it. And my objective basically is to inform, to educate, to help people understand not how they should invest or whatever, because we're not talking about investment, but we're talking about wealth preservation. That's really, the emphasis of it. That is my objective, to get people to understand how to protect their wealth. That's the important thing. And I'm glad to say that more and more people are going to my Substack for that reason. And I think these problems that we see now in financial markets are sort of making people extremely anxious. And this is why I'm so keen to get this education across, because people have got to protect themselves and their families and their communities. Well, I mean, you can't necessarily protect your community, but we live in communities and we have responsibilities to them. So, all this has got to be taken into consideration. How do we protect ourselves from the accumulated follies of the political class, if you like?
Well, that's exactly where I was hoping you would take this is scaling it up. We certainly have a growing number of subscribers and viewers on our channel, many of whom are individual heads of household, many of whom are either late career stage or retirement age and are very seasoned. They've got some wisdom from years of experience in life. They want to protect not only their immediate personal financial nest egg, but also look after generationally their family, their children, their grandchildren, etc. That's one. But secondarily, you mentioned community in larger groups. You have been invited to speak to significant organizations that are either at a commercial or governmental level. Can you give us hints of sort of the scope and scale of some of these presentations and what you're trying to, when you're trying to win their hearts and minds, what is the core of your message, and to whom have you been delivering that message in addition to your Substack to individuals?
Yeah, well, I mean, it ranges from central banks through family offices, investment management firms, conferences, and so on. I don't think I can really be that specific, but what I can tell you is that a lot of the gold bug community, think that central bankers are idiots. They're not. They're actually entrapped in a political system over which they've got very little control. And they've got mandates which they can't really deliver. And they do realize this. Now, if you're in the position of the Fed, you've got to deal with it. I mean, this is not easy. And I have great sympathy with them. Now, I can rail about how their lack of understanding of, their commitment to macroeconomics, which is non-science and all the rest of it, but that's not productive at all. And I can tell you that these guys actually have a greater understanding than perhaps we think. And interestingly, minor central banks, some of which you wouldn't even think, can spell gold, are beginning to understand the difference between money and fiat currencies. This I think is desperately important. We're looking at, in this sense, I've been talking to central banks in some of the lesser nations, if you like, and I find that they are, where they lack the knowledge, they're very keen to get it, and this is the interesting thing. There's a big shift going on, if you like, in central bank thinking. And this is all part of the whole thing. And it gives me hope that while we're doomed to make a huge, great mess of things because of our politics, if you like, and I think, to my mind, one of the great sadnesses is that, you have someone like Donald Trump who comes in and he's actually very much... He's got some very good ideas. He's very sensible in certain respects, doing away with this wokeness, trying to get some morality back into people's behavior rather than, the state saying, determining how we should behave. He's absolutely right about that. But unfortunately, his grasp of economics is just about zero. He's a businessman, not an economist. He's a politician now, not an economist. And the problem is that because everybody else has screwed it up so much, and they've been advised, if you like, by others who are still offering advice, if you like, to the establishment, the Trump establishment, he's not listening. He doesn't want to listen. I mean, this business over tariffs is an absolute classic example. And I've also corresponded with Americans who so much believe in his tariff policy, they just cannot grasp the dangers. I mean, it's extraordinary. It's rather like, I suppose, we might sort of be slightly more aware of, a diehard communist and how they won't listen to someone like me talking about free markets. We've even got free marketers in America who won't listen to me talking about free markets. They actually think the tariffs are a good thing, but actually it's not free markets, it's government intervention. That's where the problem is. But I think the rest of the world is observing this, and they're listening to people like Putin, who actually is saying exactly the right things about what the West is doing in terms of stealing assets off other nations. Like $300 billion worth of reserves from Russia. Don't hold their currencies as a waste of time. Hold gold, he says. Okay, I sympathize with that, but for very good reasons, which I'm very happy to explain and justify. But then he says, take your gold away from these people because they'll steal it. I mean, look what happened to Venezuela. Their gold was stolen by America. Now, we had a problem with that one because we tend to respect property rights. So we had to come up, we weren't going to say no to America. So we weren't going to deliver to Venezuela. So we had to come up with this sort of myth that Maduro wasn't, democratically elected. Therefore, we're not returning Venezuela. I mean, come on. The fact is that the dishonest parties in this are us. This is terribly important for the rest of the world, and the rest of the world's had enough of it. We've been bribing the rest of the world. I mean, we have, as Musk actually discovered, the amount of money being sent out, basically bribing politicians in other parts of the world. We're doing exactly the same with, under overseas aid. What happens to that? It just ends up in politicians' pockets. I can tell you that, the African countries, I guess also the Latin American countries, are fed up with this. They want to move on from this. And this is why they talk to the Chinese and, whoever has capital to do business ventures. The Africans don't like the Chinese actually coming in and just doing the whole thing. But they do recognize that they need Chinese capital. They do need Chinese expertise to do these infrastructure projects because they are desperately important. They will go into partnership with these guys. It is, if you like, constructive. Mm-hmm. As opposed to what we do, just sort of bribe the bastards. We don't care, just bribe them. That's been our foreign policy ever since the days of communism, when we were trying to keep Russia and China off our patches, or what we deemed to be our patches. So, yeah, how did I get into this rant? I think it's probably a good place to stop.
That's fine. No, in fact, I think you've illuminated why some of the underlying fundamentals that seem to be getting doubled down on here, even in that era of U.S. aid as a cloak for just bribery to oligarchs and whoever, they're lining their pockets worldwide at the expense of the good of their own people and everything, just to get loyalty to the U.S. Agenda, etc., being replaced by China and others' actual willingness to go in and build up infrastructure, build ports, build highways, build information infrastructure, airports and roads and highways, all kinds of things for these countries to help them make the leap into the first world to be able to be effective trading. Then on top of that, the SWIFT system sanctions, the stealing of assets, now the slapping on of tariffs. People will argue about, but these tariffs are just leveling the playing field. It was already imbalanced. Trump's just trying to restore some balance. Whether that's the case or not, your point is that change in the status quo from the past is still not constructive for those countries. It's not going to build allies. It's not going to build loyalty from those countries for the U.S. It's going to further diminish the role of the U.S. Geopolitically and economically. Any further follow-ups from you on that?
Well, yes, that's absolutely right. And I think there is a further point on that, and that is that countries that would like to join, if you like, the China and Russia camp are very often frightened of doing so because of, the consequences for their relationship with America. Now, I mean, you look at India. India has lots of trade with America. It's been looking at its position, I guess, in the light of these new tariffs. Other countries are frightened, if you like, of American-inspired coup d'etats. I mean, if you don't believe me, go and talk to the Pakistanis. Imran Khan, who's a perfectly sensible, good man, if you like, is in jail. Why? Because there was a CIA-backed coup d'etat, putting in the previous people who, guess what, were the people who accepted bribes, bribing this, bribing that. I mean, they were as rotten as you've ever seen. And Pakistan has been plagued with this for decades. Why? Because we keep on buying their influence by bribing the politicians. And so Imran Khan gets in, who cannot be bribed, and actually sees Pakistan's future as being very much tied, if you like, with what's going on in the whole of Asia, which is, a Chinese and Russian party. Plus the fact that, they have a common border with Iran, along the seaside, as it were. That didn't suit the Americans. So he gets chucked out. He's in jail. They tried to assassinate him. That didn't work. A few of his supporters got killed instead. We forget these things, actually. But I can tell you that around the world, I mean, you've got various other countries have been watching this, and, they know exactly what's going on. They're now, I think, less frightened of America because of the signal on trade. America is withdrawing from the world. Oh, hooray! We can actually now advance our nations. And we can do it, if you like. I mean, honestly and politicians, don't really go together too much, but at least more honestly than a situation where the politicians are bought and paid for by America and Britain. That is now hopefully coming to an end. And I think that because so many of these countries are going to be less fearful of us, then they will get on with business with China and Russia. And this is a major, major change.
That's the geopolitical shift and the business relationships that will flow from it. How do you foresee that impacting the U.S. Treasury, the dollar, and us from a monetary standpoint?
Well, I mean, we'd start with the dollar, I think, out of all those, and everything flows from that. There are two things which are working against the dollar. The first is that the use of the dollar as a trade settlement medium is going to diminish. Initially, it'll diminish because the world is being thrown into a slump by these policies, by a combination, as I say, of the credit bubble being pricked and Smoot-Hawley Mark II. That combination, I think, is going to lead to dollars being sold on foreign exchanges in return for national currencies. Why? If you're an international company based in, doesn't matter where, you're running your accounts in the national currency. To own dollars is risk. You need to get that risk off your balance sheet, go back into your own currency. Your currency might be not even as credible as the dollar, but nonetheless, that is what you do. When business is contracting, you need the money back home. You don't need it sitting, if you like, in an American bank account or invested in US treasuries or whatever it might be. The second thing is that the bear market, which undoubtedly has started and will continue and will probably involve a crash. We're not in a crash territory yet. That will impact the $14 trillion worth of portfolio investment in US equities. They will be sold down as much as possible. And the dollars that will be raised also be sold for presumably national currencies, but at the same time also gold. So you can see that's the first thing that happens is the destruction of the dollar gets underway. And the second thing is that as that accelerates, the urgency to come up with a sensible currency arrangement for the Asian hegemons and their extended partners I think the urgency will actually concentrate minds, and they will come up with something. Whether it works or not will remain to see, but I think they will concentrate their minds. And countries like India, who have objected hugely to the idea of a gold-backed currency, I think that they're going to be a lot more amenable to something sensible.
Well, this is of great import, it seems, for American investors, savers, and even those who are shepherds of investments at the aggregate level for insurance funds and retirement funds and pensions and all that sort of thing, because the old mindset that we'll just keep doing what's worked well for the past 40 to 50 years, and it'll probably serve us well in the future, because it always has in our personal experience and that of those who trained us in 20 years ago, sounds like it's a doomed to fail in the direction, the macro mega trends that are happening, this pivot globally away from the dollar and the treasury for all the reasons that you've outlined. It's concerning times for those who have based their future financial well-being on the continuation of that system and of its always bouncing back. If this groundswell of change has really taken root now, and we're in a time of rotation. Alasdair, we're grateful as always for your presence here with us. And folks, if you don't want to miss a single episode with Alasdair Macleod or any of our other guests, make sure you're on our free and private mailing list. Just put your email address in at our website, which is libertyandfinance.com. libertyandfinance.com, email address, click submit. Make sure you confirm on the confirm email. You'll get 1 email per day in your inbox, and we won't share your email address with anyone, and you won't miss a single episode with Alasdair, any of our other guests, or any weekly specials. And Alasdair, remind people how they can sign up for your Substack account.
Yep. Google Macleod Finance or go direct there, alasdairmacleod.substack.com. And
we'll put a link to that in the description of this video, folks, so you can make sure you get plugged in with Alasdair's observations of what's happening as it unfolds from his vantage point in the UK, where, as he says, has still been the financial center of the Eurozone and a key remaining ally of the US in this. We'll see how that plays out. And Alasdair, thank you for being with us along the way.
It's my pleasure. Thank you for having me.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for April 8th through April 15th, 2025, while supplies last. First this week, we feature 2025 1-ounce silver Canadian maples at just $3.49 over spot per ounce. Constitutional or junk silver is just $1.99 over spot per ounce. 1/10 ounce Platinum Britannia are just $29 over melt, and 1/10 ounce Gold Britannia are only $27 over melt. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.